We continue our look at the bottom-up economy, entrepreneurs, small companies with tangible products that could play a big role in the recovery. Now, today, I just want to focus on the potentially hot initial public offering. It's not a social networking company, and it doesn't find you bargains online. Indeed, you don't actually need a computer in order to understand what this company does. They serve donuts and coffee and ice cream. But could a proven business such as Dunkin Brands be a better long-term investment than, let's say, Twitter or Groupon? To tell us more about this industry, we're joined by Scott Rothbort. He is the president and founder of Lakeview Asset Management. Scott Rothbort is also former Merrill Lynch executive and restaurant owner. We'll tell you more about that. Also with us, Sara Senatore, senior analyst for restaurants at Sanford Bernstein. Sara is a top-rated analyst on McDonald's. Great to have you both with us. Thank you so much. Sara, let me just begin with you because we're talking about the initial public offering of Dunkin Brands. They combine Dunkin' Donuts as well as Baskin Robbins. And it's a big company. I understand. It's not, the small entrepreneur. But at one time it was. And are these the kinds of businesses that are really going to generate the jobs in the economy?
You're right. A lot of these restaurants started off as one-off. I mean, even McDonald's, right, was just one restaurant. It was founded by two brothers. What we are seeing is the restaurant industry is starting to employ more people. As demand gets better, so does job growth. And we're starting to see that in the labor numbers and the turnover numbers. Even in some of what the companies are telling us, they're starting to see a little bit less of a benefit from labor costs because they're starting to see less slack in the labor market.
Scott Rothbort, as someone who manages money but also is a restaurateur, the restaurant in Lake George, New York,
yes.
From bagels to burgers is the name
Correct.
of the restaurant. You've just started this venture.
Yes.
Have you changed the way that you look at the economy because you are now an employer of people serving food on a regular basis? Is this the kind of bottom-up economy that's going to get things back to work?
Well, I'm definitely managing things from the bottom up because I have to try to figure out what I'm going to charge to make sure that I can make the right margins on my products. And also, I'm in competition with other restaurants in the area, so I have to make sure that, a family of four that wants to come in, that they have a viable alternative to maybe the pizza parlor down the street or some other restaurant across the way. So yeah, I'm very much focused on what my labor costs are and what my food costs are. Of course, I own the building, which is another part of the model, but that allows me to control my real estate overhead costs much better. And
it allows you to, mitigate any price increases that may come about because the commodity costs have gone up.
That's correct. One of the biggest risks you have when you own a restaurant and you're leasing the property is that you're successful, then all of a sudden the landlord calls you up one day and says, well, that lease that we have that's about to expire that you were paying $3,000 a month for, I now want $6,000 a month for. And all of a sudden your back is up against the wall. I don't have that problem.
Sara Senatore, the big companies that you cover, such as McDonald's, are they able to, in a sense, absorb any commodity increases and not pass that along to consumers?
Yeah, I think restaurants, specifically some of these fast food restaurants that are bigger, that have scale, right? So they have that buying advantage. They have some contracts that allow them to wait a little bit before they feel the impact. And then, yes, they can manage their menu. You can see them try to tighten a little bit on the other line items, whether it's the occupancy expenses like, utilities or maintenance, or the labor expenses, and so that they can offset some of these inflationary pressures on the food side.
Scott, you're in competition, not grandly, with Starbucks, because I know you serve Caribou coffee in your restaurant.
Correct.
What about coffee as a draw? Does that get people to come in? Is it as popular an item as we're led to believe?
Believe it or not, we are selling far more in terms of fountain beverages, which we use Pepsi for, or Gatorade, or bottled water, than we do coffee. Coffee does sell, and it certainly brings people in, and it's a nice addition to a bagel with a schmear in the morning. But it's not really bringing in people as much as you would think. It's, because we're not Caribou coffee, so to speak. We happen to serve it, but we're from bagels to burgers. So we're trying to bring people in to get the fresh-made bagels.
All right, we're going to continue our look at the bottom-up economy tomorrow. Find out what lawmakers can do to help spur growth for small businesses and entrepreneurs. Thank you to Scott Rothbort and Sara Senatore.